Hello traders, it's 𝗏𝗏𝗧𝗏 here. Welcome to this session 144. In today's session I'm going to be recapping a number of trades that I took today. Some were whilst I was recording a training session on prop trading. That is, I had one of my long-term members, Dave. He's been trading with me now for 4.5 years. Very successful prop trader, and he was running, or I had him attend the Q&A session with some of my elite traders. And so just beforehand and during that session I'd taken a number of live trades, so I wanted to recap those. Now on reflection too, I may even release this. It was actually a 1-hour Q&A session, and I may even release it publicly as well. So first of all, there is a risk in trading. Don't trade with money that you can't afford to lose. I've already mentioned the reason. I had no intention of actually recording this session, but a number of members that were in the Q&A were asking questions about the setups, so I thought, why not? So that's where this has come from. So stick with me, because I promise you I've got some great ideas for you. I've been day trading now for 28 years, and I can promise you I've got some ideas that will make a massive difference to your personal trading. So in today's session I was actually trading the ES. I'll trade gold, the NASDAQ, oil. I love the 6E, the 6J, the currency futures contracts. So there's a number of markets. With that being said, one thing I do recommend is, if you're a newer trader or if you want your life to be simpler, learn to focus on only a couple of markets, because all markets have their own personality. Very quick advertisement. Number one, if you haven't subscribed to my YouTube channel, please do, so you'll be kept up to date with all of my videos, and the prop trading video, which I'll probably make public. You can also download my ebook, The Truth About Day Trading. Better still, why don't you become a member? I mentioned Dave. He started with me 4.5 years ago. Very successful trader, as many of my traders are, and I'm not too bad myself, as you're about to see. So you can gain everything that I teach. All of the strategies. Is over 30 PowerPoints now, hundreds of hours of training, all for $297. The members area that I have is probably one of, if not the industry's most comprehensive membership site for day traders. Now let me say this: if you want to keep your trading simple, you focus on only a couple of my setups, and I teach you what those are, and I'll actually show you those when we get to the screenshots. On the other hand, if you want to go down the rabbit hole and trade full-time and be able to trade everything from divergence to reversion to the mean to pullbacks, trend continuations, I've got the best of the best for you. So for $297 you have a lifetime access to the members area, and on top of that, whoops, and there it is there, sorry, you can also attend 8 of my live coaching sessions. So I run 2 2-hour live coaching sessions every week. I also have a live trading room, which is separate. And if you can't attend the live sessions, they are recorded and you've got lifetime access to those. Okay, let's now get into it. This is secret number one, and perhaps it's no secret at the same time. What we want to be doing, traders, is trading in the direction of the higher time frame. We're waiting for retracements, for pullbacks and trend continuation setups. At the same time, we know we're going to have reversion to the mean setups, that is like an elastic band getting pulled back. Then we're going to have divergence trades. Really, those sorts of trades initially, or if you're not already profitable as a day trader or you're a brand new trader, you leave those to the side for now. It's a lot easier trading with the trend. Now in the video, and this really prompted me to go ahead and record this session. So in the Q&A session, just as I was about to start, I was just wrapping up a number of trades. And so as you're about to see, they were very profitable, and I'm going to run through them with you. So then at the as we got underway, I already had another open position, and you'll see that in the prop trading video, and I've got a lot of live trading videos already, but as you're about to see, very successful session. Now also I've got my camera is down to the left there, right, so I can't really see what the next slide is. So let me just briefly go through some of these setups with you. Traders, I mentioned that divergence trading. I love divergence trading. There's very specific rules that I'm looking for. For an example, down here I wasn't in this setup. Now this is and if we look at the time, this is actually 19 minutes after the market reopened. I love the Globex session, the after hours market, because it's slower. Now because of where I'm based in the world, I'll trade the New York afternoon and then the Globex session and the London Open. In fact, I'm actually recording this at 52 minutes past midnight Central Standard Time, and at 2 a.m. we've got the London Open. So that won't suit a lot of my traders, of course, in the US, but these markets and all of the setups I'm explaining to you, you can trade 23 hours a day. The only change you'll make is the time frame, and that's very important, the time frame that you trade. And I like a time frame where I've got plenty of time to manage the trade. Now here on this chart, I'm trading a 2-tick Renko on the ES. Near impossible during the New York morning. You're going to be jumping up to probably a 4-tick. So we need to take that in account, because that will then affect your account size requirements. So you're about to see in a moment, I've actually got a separate slide I'll show you, something very important. Now this here is what I call a T10, and the AC1 stands for anchor chart 1. I actually have an anchor chart, a second one I look at every now and then, particularly when I'm considering a divergence trade. So quite often we'll look at this and think, oh, there's no trade here, but you look at your higher time frame and it's jumping out at you. Now first of all, I was not in that divergence trade. I wish I had been, because it was a textbook. So was this one up here, and I was a bit slow off the mark on this one. So trade number 1, for members watching, this is a T10, and then I had a slingshot up here. Now I was very hesitant in taking this one. In fact, I should have perhaps waited a little bit longer, and the reason being, we're right at a pivot. You've got to be very careful when you're trading around pivots. So trade 1 and 2, then we get to trade 3, and this is what I call a reversal trade, a T10, and for members watching, it was also a T20-1. It's also known as a ka-ching trade, and down we went. Thank you very much. Trade number 4 was a slingshot again, and what I call a 16-13. Don't get confused with the names I give them. Some of them take a sentence to explain what they are, so I just give them codes. It makes it easy, and you pick them up. There's basically 2 handfuls of codes you've just got to learn. With this one, it was a successful trade, but I got out with only 1 tick when it actually touched 6 ticks, and I was sitting there thinking, you know what, I should just snaffle 6 ticks, because see the black line, we nearly always bounce off it, and I was 1 tick off it, and I let it go, and I got out with only 1 tick out of that, instead of getting at least 5 ticks. So that was a bit of a bummer. Then I had another T10. Now with this T10, it was also a 2B on my anchor chart 1 and 2, and what a 2B means is I'm bouncing on multiple EMAs, very high probability. So that was a and just to point this out, you'll see me talk about rates of return that I'm after. Now this is all over in about 20 minutes, I think it was, maybe more, might have been 40 minutes. Anyway, doesn't matter. So I have a target that I like to aim for, and I believe that gives you clarity. A lot of traders will say don't have a target. I totally disagree with that, and I also believe in POQ. the power of quitting. I like to hit my target. So my target's 312 here, trading 10 lot, so I was up 388.60 on these contracts. Now next one was probably an hour and a half, 2 hours later. Now this is at 1900, just after 9 p.m. so remember, this is just after 5 p.m. so a few hours later we'd had our session, and I don't normally do this, but the S&P, the ES, has been just trending so beautifully. I jumped on for another 3 trades. Now I took this 2D, and I mentioned earlier I like divergence trades. Timing is everything. So I got in and I got about 3 tick slippage. I used a market order. Normally I use a limit order. Anyway, I got out with that one. Then I had a 2B bet the farm. When I have a very deep pullback, traders, I like to look for what I call a bet the farm setup. When you've got a lot of angulation, see this here, this is called angulation. When you have angulation, it means that we've had a very strong trend, and quite often, not always, will lead to a retracement. For an example, let me just show you this live right now. So this is the ES live, and by the way, remember a few minutes ago I said we usually come up. This is another thing that I discovered. I've never seen it written about in any books. This is one thing I will keep to myself. Members know what it is, but did you notice before we missed it by 1 tick? Here live we just bounced straight off it. Now what I want to point out though is angulation. This is angulation just here. So when you've got angulation, it means strength, but it also means we're prime for a reversal. And when we hit the trade line here, we've got a very high probability of at least getting a really nice profitable scalping at that time. So I had a bet the farm here, and some of those, and that was almost a bet the farm, was actually just a standard divergence trade. Now why was that a divergence trade, by the way? Let me just give you a little lesson here. See here how I've made a higher high. Down here you don't have to have this on your entry chart. This is called a MACD-BB. I've customized the MACD-BB. Look, you could, I don't really need it there, but I like it there at times when I'm confirming divergence, or if I want a double confirmation. But this is called a zero lag MACD, and with this MACD zero lag, it's very sensitive. See that there to there, it's out by 1 tick, but there's divergence, there's divergence. Now that is a reversal trade. It's also what we call a loaded trade, and the reason it's loaded because we're bouncing off the trade line, and I've got angulation and I've got divergence. So let me just quickly expand this just here, and let me check this. Now we're going down the rabbit hole. I promised you I was going to give you some ideas. Now this may or may not be, is it, a little bit further on. Okay, so at times you'll see me, I'll use Fibonacci retracements and extensions. You don't have to. I like to use it as a confirmation quite often. This one was not it. It went further than the maximum I like to look at anyway, but I just thought I'd apply that and just see if it might be applicable for you. Because on this chart here I had a bet the farm. See how also I had divergence, high on price, and see that divergence just there. Okay, so here I had a really nice reversal, a nice bet the farm, and with this one I was still with the trend on the way down. Now with this particular entry, so selling up here, we could have easily exited the trade here. Here I had a bit of a pullback, then we continued short again. Now what I've got here, this is an entry. This is a little entry you could have taken. I call that a 1613. You had an entry there, you had another one there, here, here and here. Now what you may notice, traders, I use Renko charts and tick charts. Some of my members like Dave, who we interviewed today in my prop trader, he likes Renko and 1 minute charts. It doesn't, well, yeah, no, it doesn't really matter the type of chart you use, but what it is your entries and how you then manage the setups. Now one thing I did mention was about the pullbacks, like this one just here, and I went long here. That was an exact 78.8% pullback. So from that point to that point to that point, it's not always there, and that's the thing, sometimes they do fail. And that there at 61.8, I'd already hit my target. So going back a couple of hours before, I was just under 4 grand. Here was 3.5, so I've had a brilliant day. And that was a 61.8, and then it took off. So how do I measure that? From that point to this point, okay, down to there was 61.8% retracement. Now let me give you a trade secret, and it really is a secret because very few traders do this, and it costs them a fortune. Now just here, not long after those setups, and it was just a great example because we'll probably, if I can keep it under 30, we'll go to the charts. See that point just there? So we can look at that, and those points look like great trade entries. However, we look over at our anchor chart. What I want to see is I want to be swimming in the direction of a tide, or with the flow of a river. If I'd have taken that trade there, or this one here, we would have been stopped. But I knew not to take those by what was happening on my anchor chart. And as I mentioned, I discovered these time frames where they just work brilliantly together. And if I get a retracement or a pullback, I need my anchor chart 1 candle to close to confirm the trend continuation. And it just, you know, if you ask me how come I'm so good at this, it's because of little things like that. And it's not little, it's major, knowing when to trade in the direction of the higher time frame. Now we then had a 2D here. Why was that a 2D? I've got divergence on the entry, and I've got divergence on the anchor chart 1 down here. And obviously I wasn't in, I've already hit my target. But down here, I wanted to show you these though. Down here I've got a pivot bounce, and it's also a double divergence pivot bounces. Some of your best divergence trades or reversals will come off pivots. Now let me just quickly show you this, going back to this on live on the ES again. So up here we were talking about the bounce off a trade line. Okay, come on down. We then had another bounce there, another one here, another one here, and we're going straight through the pivots, by the way. Okay, bang. Now as we're getting down here, we'd then be looking at our anchor chart to see if we're now getting divergence, which I can tell you now we would be. And now we have that deeper pullback. So you can also see with a Renko chart, it makes trading so much smoother, so much easy to identify the patterns is the word that I'm actually looking for. Now I want to quickly talk to you about money management as well. We'll talk more about the setups in a moment. And the reason this is important, trading is a business, and so many traders go into this undercapitalized. To trade for 2 tick correctly, forget what the broker says to you about having a day trading margin of $500, $1,000. That's just not applicable when it comes to day trading correctly. Now if you're trading with a prop firm, as Dave was discussing, it's a whole different kettle of fish. Okay, there you only need $40, $50, $100. It's a brilliant concept. But then you're going to do a profit share between 10 and 20%. On the other hand, if you're going to trade your own capital, you need to have around the 2 tick around 6,300. Why? Because we never risk any more than 2% of our capital. I want to quickly show you this. Stay with me, traders, and this is where I know a lot of traders get bored. They don't want to see any of this, and they wonder why they're not kicking goals. Okay, we just had a plain vanilla entry just then. look at that there. That's just a plain vanilla setup traders. Providing it was tradable, you'd be taking that. Now once again, if you're a new trader though, you would have taken that one and not this one, because that's a reversal setup. So just wanted to point that out. And I know we're jumping around a little bit, but if you're serious about a day trading career, you need to really know this stuff. Okay, so what if you don't have for 6,000? You can start with a micro. And traders, if you start with a micro, 10% of a value, you go for $32 a day. Within 12 weeks, you've now got, potentially, I've got to say legally, you've got your $7,000. You can roll over and start trading the big contract. And from there, going for that $313 a day, look where you are in 11 weeks. Okay, just going for that 26 ticks a day within 11 weeks, 10 plus grand income potential within 13 weeks, trading 13 contracts at 20,000 a week income. This is a true potential of day trading. Now let me just my job as your coach also is to be very direct and upfront with you. This is trading the 2 tick, which is during the Globex hours. You can trade it quite often during the New York afternoon, but not always. And what I tend to find, if we turn over, say, a high volume day, 1.2 million contracts and above, you're usually going to have to trade a higher time frame. But a good 90% of the time during the after hours market, which suits so many traders anyway, you can trade for 2 tick. Now from there, traders, you can trade with a smaller account size and also target the same sort of money. Okay, and you can be there within 9-10 weeks. However, I really recommend the correct stop loss placement. I like to place my stop 1 tick above the swing or 1 tick below the swing low, provided I don't have a runaway market. In other words, if I have to execute a market order and the market takes off, I'll just run with the stop that I've got. Now stop on the ATM. Now what if it's only $15 a day? Let's halve the return. So let's just say here once again, I've got hundreds of traders. Actually it's in the thousands now. And if you've blown your account a number of times, whether you consciously know it, the psychological damage that's been done is incredible. So how do we build your confidence again? Small goals. Evidence defeats disbelief. On the other hand, you may be a retiree also, or got a job. Maybe you're a school teacher, for an example, work long hours and you only have an hour a day or so. And when I say an hour a day, that's provided you've got the setups in that hour. Okay, sometimes you might be sitting there when it's dead quiet. Isn't usually the case with the ES or gold, by the way. Gold's gone ballistic this year, but if you go for just your 15 a day within 24 weeks, I think that is down there, you've now got the funds to roll over. Now if you've seen the movie Moneyball, and you'll hear me talk about this movie all the time, Moneyball, it was filmed back in 2011, and Brad Pitt says, as he says, just get on base. Don't go for the home runs, just get on base. And that's what scalpers do, because our risk is much lower and we can hit our targets quicker, get in, get out. For an example, last Friday, let me just quickly pull this up if I can. Last Friday I went for a home run, and I normally never do this. I'm just going to move this along. Okay, just here. So I was going for a home run, and what I was targeting here, traders, by the way, you can't see it here on this, down here, I was targeting the pivot down below. And it was actually I classify pivots, open, high, low, and closes, traditional floor pivots and camarilla pivots, and I was grinding all the way down. Now normally I would have been out here, had another go and had another shot there. For me, doing that, it's a lot less stress by getting in, getting out, because when you're in a trade and you go and give that back, you know, you're sweating bullets that the trade's going to then continue back in a direction. And down here you can see my exit, very high probability that I was going to get a pivot bounce. This is what I mean about 28 years of experience, knowing how to trade into these pivots. You see pivots, swing highs, swing lows, high of day, low of day, they become both what we call price magnets and major support resistance levels. So here you may decide then, you know what, I just want to fire off 2 trades a day, 2 very high probability trades a day. Members watching, you know what they are, 2Bs, and get in, get out, get paid within, what's that, about 14-15 weeks. Oh, that's about 20 weeks I think. Potentially $5 grand a week, 28 weeks trading 15 lots. There's your 10,000 a week. This is the true potential. But the reason most traders don't ever achieve this is greed, lack of discipline, and lack of consistency. They don't have a trading plan, all of the things that are absolutely essential for success as a day trader. These are the levels that are absolutely critical to your trading. Your major EMAs, as I mentioned, I've also got a trade line, couple of little secrets in there as well. And you'll notice on my charts I've got arrows and the white paint bars of a super scalper. Okay, so we've got separate trade lines. Now see the black line, it turns on a key. It's basically a triple smooth weighted moving average, and you could just trade in the direction of those. That's all you need to do. And if you just want to keep your trading simple, for an example, you could trade just in the direction of the trade line on the higher time frame, just following the trend. I don't want to make it sound too simple, but that's what you can do. But these are the areas that are critical. Look, we're just about out of time, traders. So what I do want to just point out again is, why don't we just quickly go to the chart just here, go back to this one again. We're up to 28 minutes, and I'll try to keep these short. See the orange cloud and the blue cloud. Now I recommend all new traders just trade in the direction of the cloud. Now we use additional entry signals such as the hooks. You can see the arrows just there. You've got then we start to turn. This is the low of day. Then we want to trade, if you're going long, in the direction of the blue cloud. What about just here? Because if we had have taken that arrow just there, we would have been stopped. But remember one of the secrets I gave you? If you have a deeper retracement, it means on your higher time frame you would also have red candles. You want to wait for a green candle to pop back up before you take the trade. This overall is an area we want to be very careful of. When we see our EMAs sideways like this, we call this the ice cream sandwich, squishy or spaghetti. You've got to be very, very careful. Sorry, trader, I'm just looking up at some other charts there. Got to be very careful of these zones. What you want to see is the start of what we call the fanning of the EMAs, and that's the fanning. The late Bill Williams used to talk about the gator, the crocodile, and that is when the croc's hungry, you're ready to make money. See how our moving averages and our trade line opens up. When they start to come together, it's had its fill. Now's the time to be super cautious with our trading. So look, I've covered a lot, traders, in this session. You may not think there's anything golden there, but go back and listen to what I had to say about higher time frames, trading the bet the farms, trading divergence. This ain't rocket science, and the reason, traders, that I can get these sorts of results here is because of the setups that I teach, and most importantly the logic behind them. Now the late Mark Douglas, he would say, if you want to truly master the art of day trading, find strategies that identify patterns, because we as ones that are pattern based, not mathematical based, because as humans we're very good at picking patterns. Every one of these is a pattern, and once you learn the pattern, you've got it for life. So traders, in the link below you can come and join me in our sessions. $297. You have lifetime access then to the members area. There's literally hundreds of handouts, videos, PowerPoints, but as I mentioned, if you're brand new, you won't get overwhelmed, because in the welcome email I'm directing you where to start, giving you precise instructions. Right, traders, thank you. Make sure you've subscribed to my channel, and I'll see you as a member soon. Thank you.